What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be implemented when trading any company that's publicly traded in the US stock market. Make sure you hit that like button if you enjoy this video. It really helps the channel grow. Many thanks to those who continue to tune in and give us the thumbs up. We really appreciate that. If you're not already subscribed, make sure you hit that subscribe button and the notification bell. That way you're alerted to when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos, like tonight's video, we mainly focus on identifying triggers and targets for, scalps and intraday trades, all the way up to, swings and leap trades. So if you do want, a deeper dive into exactly how we set up our charts, the different color coding for the time frames, broadening formations, and different levels of that nature, make sure you check out the bonus content. We do dive deeper in those videos there. And if you do want more information about the strat, which is the base of our charting method, you can find more free information in the description of this video as well. So I do encourage you to watch the whole video along with the triggers and targets. We do give some pretty good insight into price action, basically on all time frames. So with that, let's go ahead and get into the agenda for today. We'll go ahead and first recap the price action from Monday, November 17th, and then we will zoom out like we always do, look at the week, month, quarter, and year. And then we'll zoom back in to set our triggers and targets for Tuesday, November 18th, and then we'll do a quick review of the triggers and targets for the week, month, quarter, and year. So just looking at today's intraday price action from the scalping perspective first, like we always look at it. If we, recall the proven and repeatable strategy, we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. So you see, you might have been able to get something on the 1 minute. We don't really look at the 1 minute too much, but you would have had to get in at basically at the very beginning of the day to get that first pop to the upside. We had an opening print here at 37.90, which is, opening print is just the first traded price of the day. Up at the top of the page, we've got the previous high a day. Then we've got the overnight high here in the light blue. Then towards the bottom of the page, we've got the previous low a day. And we can see we opened up, first traded price of the day was basically right at overnight low, which is this 37.82 level here in light blue as well. Another level I will just mention is the purple dash line, which is last week's 50% level. We talk about this every week, right? We want to see how price reacts to that level, essentially, right? If we don't even go to it, if we're just above it the whole time or below it the whole time, then it's going to be a pretty directional week. But if we start the week out and we press towards that 50% level, whether from the underside or from up top, we have to continue to watch things a little bit closer to see what decision is going to be made, where price action is going to go. And until then, we've got to just use the last week's 50% level up here as a level of resistance or support, right? So right now it would be a level of resistance because we're below it. There was no higher low at or above opening print to get into calls early in the morning. On the 15-minute, there was a higher low here. We did actually grab that, we grabbed some of those calls just to risk to reward. We've had been pushed down a pretty good amount over the last couple of days. It's right at opening print. The risk to reward was there, so we did push up. Now it did get a lower high. I think it was on the 15. We got stopped out basically at even. Yeah, so there was a lower high. So as soon as price went below lower high, we went ahead and stopped out. So it was minimal gain. We had a little bit, but not much there. Instead, we continued to watch, and we actually grabbed puts with the lower high underneath, or basically at opening print. Another one of the reasons why we did that, let's just take a look at like vol QD. So if we take a look at, if I can type, there we go. If we take a look at vol QD and we let's go to the 1 day 5 minute chart, we can see around here is when we started to really break down. I believe this was the lower high, and then we can see we broke down. So by then, we've already pushed, we're below the zero line, we're getting closer to the trend lower zone, this negative 400 million mark. So, the risk to reward was there for the downside. So we went ahead and took that. Just looking at the other internals as well. Let's just so we know we're not, ADQD, right? It was the same thing essentially. By this point, we are already in the trend lower zone from a market breadth perspective. So, the signs were there for us to go ahead and to get into puts. And so that's what we did. We held 75% of them through the end of the day, essentially, closing out 75% once we got to last quarter's high. We've talked about that in previous days and weeks about that being a major level of support. So we unloaded a good chunk of those at that level, which was actually kind of good because we did bounce at the end. Took a little bit of the profit away from the ones that we have left, but we wanted to go ahead and leave those on the board, just looking at we're in a downtrend, right? 1 hour, 4 hour, 1 day. From a shorter time frame perspective, we're in a downtrend. So want to continue to keep keep a foot in the door as far as puts are concerned, so that if we do continue to push down tomorrow, we're still in the game. If we do push back to the upside, that's all right. We've got enough profit at this point in time that we've got some cushion. If we get a real big gap up, we could end up taking a small loss, depending on where we gap up to and the reaction at that level. We could stay in those, right? The puts don't expire until next week, and so we've got a little bit of time to play with on our hands. So we can continue to monitor those. Like I said, if we look at the 1 hour, let's get a little cleaner chart. If we look at the 1 hour, right, lower high, this is essentially made a broadening formation. If we, get the right tool here, essentially just made a broadening formation, right, high to high and low to low, right? So we just made a broadening formation, and you can see after it got back below the 50% level of that broadening formation, it went down to the bottom of the broadening formation, right? Basically bouncing off of there and starting to get some lift there. Now, do we push back up to the top of this broadening formation? Possibly, but now, we've got to look at things like the weak flip. That's going to act as resistance. We've got the, what fib is this? The 78.6 fib of the bull flag from the April 7th low right here. That's going to act as resistance. Previous high a day, lining up with the previous week's 50% level. It's going to act as resistance. Another reason why we would hold that as a little bit stronger resistance as well is because we've got this downtrend line, the daily downtrend line that intersects basically if we continue to push up, right, all at that area. So could this be a little bit of resistance? Yeah, we could pop through it. A little bit of resistance, we could pop through it, but I would expect this to be much more resistance for us. Even if we are going to continue to push the upside, I would expect to see, some type of pullback here for a higher low, or at the very least sideways action, right? But at where we're at right now, we're in a downtrend, right? That's the 1 hour. If we look at the 4 hour, again, we're in a downtrend. Let's just go bring a cleaner chart, right? Lower high, lower high, lower high, lower high, soft lower highs right here, but we're making lower lows, right? Lower low, lower low, lower low. So we're in a downtrend. Same thing with the day. We've done nothing to flip it. Yes, we had an inside day, but it was red, right? So we got lower high, lower high, lower high, lower high, and we're continuing to make lower low, lower low, lower low. So we're in a downtrend, right? So that's another reason why we kept some of those puts to swing overnight. See what happens. We are, looks like up slightly in after hours, but it's after hours. We'll see what happens tomorrow if we continue to push down. If not, again, those are hedges for the December, January, and beyond calls that we have. So it's not that big of a deal. We made some good profit today. If the profit of the remainers gets eaten up, and even if we take a small loss on those, it's not going to be the end of the world. Yeah, could we have had a little bit more profit, but we'll still end up profiting overall in the end and staying in the game when there was a downtrend. So, you can't always call when it's going to flip, right? And it could flip pretty violently with SOXL, right? It's a triple leverage product. So we could just get a big bounce day tomorrow, and then that kicks off the start of the push back up, right? So be it. That's all right. We covered what we were supposed to cover on the downside. All right. Let's go ahead and zoom out to the week and look at that. We've got, actually, let's take some of these off of here. right? So we are still an inside week, but we're still pulling back, right? Here is the flag pull in the flag, right? This is the April 7 low. We've got the flag pull moving up here. We've got the flag, and you can see these Fibonacci extensions of that bull flag, right? So we reached that 100% fib extension. We actually even reached up to the 138.2 essentially, right? So the job was done, right? That's all we can really expect is a 100% fib extension of that bull flag, right? From there, we have to continue to digest and see where price is going to go. So we do have an inside week. It's more to the downside. It looks like we're probably going to go 2 down on the week this week, or there's a higher probability of that happening than us going 2 up at this particular time. We'll have triggers and targets ready for both sides. That's what we do. We're not predicting for anything right now, but it is just, if we just look at it, we're closer to going 2 down than 2 up on the week. Again, not the end of the world. We've got gaps below that are kind of acting as magnets. We've got plenty of room before we can set a lower high. So again, not the end of the world, not the most fun thing to go through if you're a bull, but you do have to kind of adapt, right? You've got to go with where the trend is going, right? So you can try and fight, and you can try and buy bottoms and do all of that, but why do that when you can just go with the trend? We're in a downtrend on the 1 hour, the 4 hour, the day. So just look for those opportunities to buy lower highs and continue to ride things down from a shorter trend time frame, and we'll just continue to monitor the week, right? If things get to be looking too bearish, right? Say maybe we do even push up, but that gives us a lower high. Now we know, all right, we should probably get out of the December calls. Probably be a good idea to take profit on some, if not all, of our January calls, and just look at further outdated expirations at that point. That if we don't already have them, we have some Marches, and then we have some January 27, January 28s. But for more of the swing type of trade, we'll be looking for January, February, March contracts with better position to the upside if we were to get, to the downside if we were to get that lower high on the week, right? The week is where you really start to change your mind from a mid to longer term approach, right? That you're probably going to go through a bigger pullback than just this, right? You go up, make a lower high, especially if you make that lower low. Now we're in a downtrend. Now where do we go to, right? At that point, we've got these gaps that we got to look at. Do we pull back and start pulling back into some of this thin structure that we never corrected on the way up? Possibly, but for right now, we're still in pretty good standing from the week perspective. Definitely more neutral, starting to lean a little bit more bearish, but again, we haven't put in a lower high, we haven't put in a lower low, so right now it's just bullish digestion with a wider range than some may want, right? I particularly don't mind this. Like I said, I'm playing puts to the downside as we go down, and we'll look for a range, right? Back here we had an 11-week range between 24 and 28, right? And it was very easy to play puts at the top of the range and calls at the bottom of the range. Maybe we get into that type of position with even a bigger range. That we're not going to predict anything, but right now we're just looking decent, right? Neutral at worst, right? From the month perspective, now we are, oops, make this a little bigger. Now we are, just like with the week, we're getting closer to a 2 down on the month at this point. Again, from the month, it wouldn't even be the end of the world because this is a higher high in the trend count, right? We had this higher low. We're higher than this previous high. We're higher than this previous high. So we're even from the month perspective, yeah, it's a decent pullback. But this was a lot of, I don't want to say it was thin structure, but we went up without too much looking back in October, right? So we've got to account for that. People are going to take profits. People are going to take some risk off the board going into the end of the year. But again, we go 2 down. It's not the end of the world, especially if we make a higher low and then we continue to push up through the end of the year, right? I wouldn't even turn bearish if we went 2 down, unless we've made a lower high on the week, right? If we go 2 down on the month and on the week simultaneously without some type of lower high on the week, it's still not bearish for me yet. I'm neutral, but I am willing to play either side, right? And I'm not so much looking for the huge push into the end of the year unless we get some type of turnaround, right? We at the very least stopping the downtrend on the day chart, right? But again, from the month, nothing to really worry about. Let's look at the quarter. Right now we're starting to fall into, oops, there we go. We're almost no longer in force with the 1, 2 down, 2 up that we triggered, right? We got to stay above this 36.15 in order for that to stay in force, and you can see we're at 36.84, so we're in real jeopardy of no longer being in force on the quarter perspective. The quarter is where I become more bearish if we start pushing more to the downside, just because we've got to wait for the quarter to finish. But if the first quarter of 2026 we end up going 2 down, well, that locks this in as a lower high on the quarter, and that's coming from a lower low on the quarter. To me, that spells the start of a downtrend. And then we've got to really look at, maybe we get rid of some of the 27 and 28 contracts we have while they're still in profit, because who knows what type of pullback we go through. And instead of sitting through that pullback and watching at least paper gains, go away, it can be a better idea sometimes to go ahead and take that profit, play puts to the downside, sell calls while things push to the downside. Then once we, trigger back to the upside, those 27 and 28 contracts will still be there, right? And possibly even in a better entry than you had before. We happen to get some pretty good entries on our 27s and 28s. So don't know that we would get a better entry on them unless we really, really pulled back. But at the very least, you could get back in where you got out, right? And you just back to work, right? But on the quarter perspective, again, neutral at worst. We got to wait till next quarter to really determine whether or not we're going to really turn bearish, right? Because even if we pull back and we have a red inverted hammer on the quarter, right? If 2026 we end up going back to the upside, even if it's an inside candle, we haven't triggered the two down to lock in the lower high. So month, quarter, we look at the year here, right? We turn the year around, had the 1, 2 up, 2 down, but we made a higher low on the year perspective. Again, got to try and push back up, get some of this upper wick taken away, hammer, finish in more of a hammer candle instead of we're starting to squish down into a doji here. But again, even on the year, neutral at worst, right? So I think that just the common theme is patience right now. It hasn't been told what's going to happen yet, right? There's so much room that we can pull back and still be in an uptrend that there's no reason to jump overboard and just start buying long dated puts and things of that nature just because of what we're going through currently, right? We got to make sure that you zoom out, keep level set, and understand where we're at, what can still happen from a positive perspective too, right? Not just what can happen negatively. So let's go ahead and zoom back in. Let's look at our 4-hour markers and our triggers and targets for Friday, right? On the chart, we can see here we've got towards the top of the page previous high a day, Monday's high, which was 40.08. We don't have an overnight high and overnight low yet. We'll have those established once price finally opens on Tuesday. But for now, we'll just say that we'll just go activate. We'll just say overnight low is here. Like I said, we've been kind of pushing up overnight, so we'll say overnight high ends up somewhere around here, right? So just in getting to the proven and repeatable strategy, from looking at it from a scalping perspective first, I guess honorable mention here would be this yellow solid line, which is last quarter's high, and this purple dash line, small dash line, that's last week's low. Right, you want to definitely keep in mind where those are at, as well as the week flip, right? Where Monday opened, that's where the week opened, right? So if you're below this level from a week perspective, the week is red. If you're above this level, the week is green. So definitely want to keep in mind where all of those are at. Now, if we were to open, let's get it right drawing here. Let's say we open somewhere in between overnight high and overnight low. If we open and we push down, maybe say we get a bounce off of overnight low and we push back up, and then we get some type of lower high at or underneath that opening print level, we want to look to get into puts, right? We get that lower high, you get in as soon as that lower high triggers. Your first target is going to be overnight low, and your second target is going to be previous low a day. All right, that's just from a pure scalping perspective. Now, on the other side of the coin, if we open and we push up and then say maybe we reject off of overnight high or the week flip and then we push back down, but we get a higher low at or above that opening print level, then we want to look to get into calls, right? And the first target is going to be overnight high. Second target is going to be previous high day. Now, if you go outside of those levels, then we can look at our triggers and targets on the 4-hour chart and day, which we'll look at here in a second. But just from a pure, repeatable strategy, proven strategy, following the rules, if you get higher lows at or above opening print, you want to get calls. And if you get lower highs at or below opening print, you want to get puts. All right. Let's scroll out a little bit or zoom out a little bit here to the 4-hour chart. Take a look at more of a longer intraday play or possibly even overnight swing, depending on the if there's some type of reversal or something triggered from a strat perspective. So we can see here we've got on Monday the first 4-hour candle was a red 3, the second 4-hour candle was a red 2, but it has more of a hammerish look to it. So if the first if we continue to push up overnight in that first 4-hour candle of Tuesday, November 18th, breaches above the high of the second 4-hour candle of Monday, then we've got a 3, 2 down, 2 up. So that triggers here at 38.04, the high of this candle, and the magnitude is up here at 40.08. All right, so a decent sized move if we do get more price action to the upside. Now, we get to that level, we're running into last week's 50%. Possibly this, where it intersects with this daily downtrend line. You've got your broadening formation here, so look for this to be a level of resistance if we do get up to these price levels tomorrow or on Tuesday, depending on when you're watching this. But if we do get price action to the downside instead of upside in that first 4-hour of Tuesday, that triggers the 2 down continuation and basically going to see the bottom of this engulfing candle, see if it can poke below and get more traction to the downside there. You could get support off of the quarter flip and last month's low. That's these levels down here. 34.17 is the quarter flip. That's where if we go below that level, the quarter is red, and 33.98 is last month's low. You also want to take a look at the market maker's expected move low is down here at 33.40. If you're not familiar with the market maker's expected move low, make sure you check out our weekend video where we dive a little bit deeper into that. But you can see where all of these are kind of lining up along with the bottom of this broadening formation. So we could see support here, even if we do push down tomorrow, especially in the first 4-hour candle of the day. Now, if we look at the day chart, let's get something better here. There we go. So if we look at the day chart, again, we're in this downtrend, lower highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. All right. So if we get more action to the downside, I'll make this a little bigger for everyone. That triggers a 2, 1, 2 down. Now there's not a lot of magnitude here, right? It would trigger at the low of this 1, and the magnitude would be the low of this 2. But again, it would be a little bit more momentum rolling with us, right? Seeing how we close the candle up here. If we end up back down here, started to build some more momentum to get down to that side. And again, look for the support here around the quarter flip, market maker's expected move low, last month's low. But do remember we have this gap below us that is still going to act as somewhat as a magnet, right? I'm not saying that we're going to fill it or get to it on Tuesday, but it is something that we have to see out there as a possible magnet for price. Once we get past that, we start to get to this 38.2 fib extension of that bull flag from the April 7 low, and then we start getting into last quarter's 50% and the more gaps that are below us. So we start to really threaten a lot more. The bears will really be in control if we get underneath this 33, 34 level. I believe if we get below 33, 34, I believe that we will there will be a high probability chance that we see last quarter's 50%, as well as the gap that resides right below the year flip, right? So if we get below the quarter flip, that makes the week, month, and quarter red. And then if we get below the year flip, that makes the week, month, quarter, and year red. Now bears are in full control, right? So we do have to look out for that. As we continue to pull back, it's getting a little bit more dangerous. But if we look at things, right, that 29 level that's the top of that 11-week range that we were in, right, back in June, June through August, I believe it was. Let's see. Yeah, here we've got dates right here. If I just open my eyes, right, so we've from June till early September, we were in this range. So you could see this as being a pretty major level of support if these levels don't hold. All right, that's the downside. Now to the upside, again, 212 reversal would be to the upside, and not a lot of magnitude there, right? The trigger would be the high of the high of Monday, and the magnitude would just be the high of Friday. So not a lot there, but that would trigger a 2 down combo 2 up that would look to see Thursday of last week's high, which also coincides with a gap, right? So that gap could, just like the gaps on below us could act as magnets, this gap above could act as a magnet if we start building momentum and pushing to the upside. Keep in mind this 50% level of last month, so that's probably going to act as a level of support. Of resistance. Again, not saying we have to reject there, but don't be surprised if we see some sideways action once we get to that point. We get past that, now we start looking at the market maker's expected move high in that 100% fib extension of the April low bull flag, coinciding with the market maker's expected move high. So don't expect to go just busting through there unless we've got some type of catalyst. Now, we do have NVIDIA's earnings this week, so take all of this early week price action with a grain of salt. NVIDIA's earnings are really going to tell the tale for the market, right? But in the meantime, we've got to play what's on the charts, and that's what we've got to the upside and downside. Let's go ahead and look at just the hard numbers here. Go to the notes. Here's our notes for Tuesday, November 17th. On Tuesday, November 17th, there will be 29 trading days left in 2025, and the closing price on Monday, November 18th. Oh, see, I caught myself, right? So this is actually for Tuesday, November 18th. Let's get that right. And on the 18th, there will be 29 trading days left, and the close price on Monday, November 17th was $36.84. All right. Now that the week has opened up, we've got price action for the week. We know that in order to turn the week green, we've got to get back to that 37.90 level. In order to turn the month green, we've got to get back basically up to 50. All right. We're down here at these levels where we pointed out on the charts. We're in jeopardy of flipping the quarter red. We're also in jeopardy of flipping the year red, right? And that happens at these levels. So keep those in mind. Again, the market maker's expected move for the week was plus or minus $5.46, giving us a range of 44.32 to 33.40. And we know where our gaps above and gaps below are, right? We talked about the repeatable strategy from a scalping perspective, looking for higher lows at or above opening print to get into calls, and looking for lower highs at or below opening print to get into puts, all right? If we look at the 4-hour chart, we know that if we go to the downside, it's a 2 down continuation, triggering at 35.53, extended targets, or first target of 35.15, and then extended targets of 34.17 and 33.18. That's on the 4-hour chart. Now, if we go to the upside, that does trigger a 2 down, 2 up, triggering at 38.04 with a magnitude of 40.08. Right, so that's a little bit more magnitude to work with. I did throw in these intermediate targets on the way up because we are in the face of that downtrend. We're in a 1-hour downtrend, we're in a 4-hour downtrend, we're in a daily downtrend. So these are levels that I've pointed out on the chart before that we can definitely see price either reverse or start to go sideways, right? But the ultimate move to the upside, if we go to the upside, is 40.08. Now on the day chart, if we go to the downside, we talked about there's a 2-1-2 down with not a lot of magnitude, right? It triggers at 35.53, magnitude is 35.15. So we went ahead and looked at the chart, got our extended targets, 34.17, 33.18, and 32.83. That's to the downside. Now to the upside, if we go to the upside again, that'll give us a 2-1-2 up, not a lot of magnitude, triggering at 40.08, magnitude being 40.60. And then we've got extended targets of 41.32, 42.07, and 42.64 on the board. All right. Now on the week, we're still inside on the week. We haven't triggered to the upside or downside. We know that if we go to the downside, it's a 1 combo 2 up, combo 2 down, trigger at 35.15 with a magnitude of 34.17, which would then trigger a series of combo 2 up, combo 2 downs with magnitudes of 33.18, 32 flat, and 31.25. All right, that's the downside for the week. Now, if we trigger to the upside on the week, that gives us a 2 down, 2 up, triggering at 45.52. Excuse me. With these intermediate targets that I have on the way up to the magnitude of 50.19, right? It's basically a $5 move for the whole strat, right? The 2 down, 2 up, triggering at 45.52, magnitude of 50.19. But in the face of a 1 hour, a 4 hour, and a daily downtrend, I feel it only responsible to put some intermediate targets out there. So those are the levels you want to shoot for on the way up to that 50.19. Now on the month, we talked about it previously. We're still inside on the month as well. We're getting towards the bottom of the month though. So getting close to triggering that 2 up, 2 down. If it does trigger at 33.98, got a intermediate target of 28.93 because the full move is 33.80. Or I'm sorry, 23.80. So that's a $10 move, right? I feel even with a 1 hour, 4 hour, and daily downtrend, we don't have a weekly downtrend yet. So I would feel only responsible to put this possible intermediate target in on the way down to 23.80. At the same time, if we push back to the upside this month, we've still got, half the month left basically. So we can still push back up to 50.76. If we do get there, we triggered the 2 down, 2 up. First target 54.42, 56.92, and 59.30. I don't think that we should go too much further than that, especially right now, right? We got to flip the daily downtrend around at the very least. So if we were to make it to 50.76 by the end of the month, I don't think we would make it too much higher than that because we've got to push all the way back up from 36.84. Again, triple leverage product, could get there pretty quickly, but just seeing that we have to first turn around those downtrends. Don't expect too much higher movement. On the quarter, we did talk about how the 2 down combo 2 up was triggered at 35.49 and reached its magnitude of 36.15, which then triggered the 1 combo 2 down combo 2 up at 36.15 with a magnitude of 70.08. Now, regardless of the downtrend, daily downtrend and 4 hour downtrend and 1 hour downtrend, a move from 36.15 to 70.08 is a big move. So regardless of the short downtrend that we're in, I still felt it only responsible to put these targets in on the way up. We did reach a couple of them, but we've still got a ways to go, right? So want to continue to see that push up. And then on the year again, we reversed that 1 2 up 2 down, giving us a higher low as of this point, forming more of a hammerish candle. Still got about a month and a half left to go, so want to continue to push up through the end of the year. But if we don't, it would take getting all the way back down to 23.50 before we're back in force on this 1 2 up 2 down. I say all the way, it's really not that far. It's only $13 away. So if we start to get close to it again, if the year turns red, now we're looking at, are we falling back into this, and what does 2026 look at that point, or have the possibility of looking at that point? But again, we don't want to get too far ahead of ourselves in either direction, either up or down, right? We're just basically neutral from a year, quarter, even month perspective, right? Until we put in a lower high or a lower low on the week perspective, we've got to remain neutral and be ready to play, the price action whichever way it goes. So I think that's what I've tried to lay out here for you in the triggers and targets for everything all the way from scalping up to the 1 year chart. Really hope everybody has enjoyed this video. Again, we just tried to cram in as much information as possible without taking up too much of your time. So if there is more that you would like to see or hear about, let us know in the comments. If you think that we ramble on a little too long in certain areas, let us know in the comments as well, right? We don't want to waste anybody's time, and if we can effectively put the information out there that needs to be put out there in less time and less words, then we'll be happy to do it for you. But anyways, if you've made it to the end of the video, we really appreciate it. If you wouldn't mind giving us a thumbs up, it's free. This channel's free, so it really helps the channel grow. Lets us know that the things that we're talking about are resonating with people, and we don't need to be talking about something else or diving deeper into certain things, right? We just want to make sure that we're staying on course for you all. So the thumbs up goes a long way to let us know that. All right. So we'll go ahead and end the video like we normally do. If you're watching this on Monday night, I hope you get some good rest tonight and wake up refreshed tomorrow. If you're watching this Tuesday morning before the market opens, hope you got some good rest last night and woke up refreshed this morning. And I look forward to getting out there and trading with you.